Good morning. Good morning, my people. Good morning, everybody. All right. Goodness, good morning, success. Good morning to you as well. Welcome to today's class. I wasn't able to join you guys on Monday, but I think Chief Leroy did some justice to the market for us. So today's class, as usual, is a live analysis here, and so we're gonna go straight to the point. Um, because today is Tuesday, some of us have stuff to do, and we're just taking our time to join in for the live. So we're not going to waste time on this. However, here's how today's class is going to go here. I just have one or two things that I want to share with you guys, and then we'll also look at some setups that I already have running and the setup that I'm anticipating. Yeah, so we're going to go straight into the chart now. So the first thing, like I said, I want to talk about is a little bit of currency correlation, because we're currently on two trades right now. Two trades are active: GBP USD and USD JPY. Yeah, both trades are active, and right now we're buying one, we're selling one, right? And from my analysis, if one should go correctly, that means the other one must be correct as well. Why do I say so? Because these two pairs are opposite, or what we call negative correlating pairs, right? So as a trader, sometimes you need to understand the pairs that you are trading, especially if you're a currency trader. If you're trading currency most of the times, right? So you might find yourself trading USD Euro, Euro USD. Maybe you're buying Euro USD, and then you still find yourself selling GBP USD. Now, you do know that that's a negative correlation, right? Because USD is on the base of, is on the quote of these two pairs. So that means that one is driven by the other. So if USD is on the quote of both pairs, you cannot be selling and buying the other, or selling Euro USD and buying GBP USD. It's not possible, because they will eventually go into losses. So if you're buying Euro USD, your analysis should also align with you buying GBP USD. Why? Because USD is on the quote of those pairs, right? So on the flip side, if you're buying GBP USD, you should be selling USD JPY. I don't know if that makes sense, but let's get to the chart. Let me give you guys, let me just show you what I actually mean here. This whole talk might be confusing, so let me share my screen and we get on. Okay. Okay, please let me know if you can see my screen now before we get into that screen dilemma that we had last time. Uh, please let me know in the comment if you can see my screen. I'm currently on USD CHF. All right, thank you for that confirmation. So I want to explain something here. Just a recap. I know some of us already know this, but just a recap here. So let's say I have two pairs now. Euro, let me put this on cap lock. Euro USD and GBP USD. Now, what I mean by correlation is this here. Now we have a positive correlation on this pair. Why is that so? Because you can see here that this right now, this USD is on the quote side, right? I have USD on this side of the whole combination. So if Euro USD is bullish like this, what do you expect GBP USD to be? GBP USD as well should be bullish. It may not be identical, There are some pairs that have like 90-95% correlation. I'll show you an example. But on this one, we are seeing that since both of them are on the what? The quote side, it means that if the dollar is falling, these two pairs will be rising. And if the dollar is rising, these two pairs will be falling. So if you're trading and your analysis shows you that, hey, I want to buy Euro USD, you shouldn't be seeing another thing or a sell on GBP USD. If you're seeing a sell on GBP USD, that means you should track back and look at the two pairs, properly analyze them, or go back on the USD, the dollar index, and analyze properly so that you don't get trapped on the chart. Yeah. Now, an opposite correlation for Euro USD is what? We have USD CHF, right? USD CHF. Now, for USD CHF, if Euro USD is buying, what will happen? You should be thinking of how to sell USD CHF. GBP USD, its negative correlation is what they call it again is Euro GBP, but we're not going to use that. I want to use this because we're currently on these two pairs right now, and someone was asking me a question, and that's the reason why I decided to share this with you guys today. Yeah, JPY. So now GBP USD Euro USD JPY, they are negative correlation. Why? Because I have GBP, I have the USD on the quote side here, and I have USD on the base side here. So that means if I am selling GBP USD, I should be buying USD JPY. They are not 100% correlating negatively, but they are very much like about 60 to 70% correlation. That means if USD JPY is going up, GBP USD should be dropping down by right. Okay. So that being said, I want to just point out this and show you guys the setup that we are currently holding. I want to show you guys the setup we're currently holding. Please, I've moved to USDJPY. Let me know if you can see. Let me know if you can see my chart. I'm on USDJPY right now, so that we'll all be in sync here. I don't want what happened last time to happen again. Please let me know. I'm on USDJPY. Please, if you can see my chart, just type a 1 in the chat or a yes. All right, good. USDJPY, good. So now I sent this out. I sent this signal out this morning. I sent it on the Telegram and also sent it on my VIP community here. And we're currently on this trade and it's moving out in profit. Now, let me do the breakdown of this this particular analysis. Starting from the higher time frame, if you look at this analysis from the higher time frame here, you might be wondering why, or might not see the reason why I'm entering here, because you know, if you know my trading style and my pattern, you know that I'm more of a high time frame trader here. I don't like trading around smaller time frames, and also this is more like a shallow retracement for me. You see, after this whole push to the upside, you can see here that the market is just giving a shallow retracement. But then again, I saw some confirmations on the lower time frame, and that is why I'm joining in on this buy. But then the overall movement, this is actually what I'm looking at here. On USD JPY, if you go down to the daily time frame, first of all, you would see that we have done what we call a nice liquidity sweep concept here. Market gave all this resistant level here, and then we have, if you've watched my video on liquidity sweep, that liquidity sweep entry, you would understand this, the concept behind this right now. Market slightly or largely took out all the liquidity above here, then finally dropped back into the structure. So the market dropping back into the structure here, from one of the concepts that I gave in that video, I explained that when we have a close, like an engulfing close, we don't want to see, you could easily just enter immediately after the engulfing or the tweezer closes, right? But there are some situations where the engulfing might be too large, too long, or in a very much higher time frame, which this is the case of a higher time frame now. So you will not just jump in on the sell immediately, but where will you put your stop loss? Way above here, and that's going to be crazy, right? So To get a proper entry on this, what I'm simply doing is I'm waiting for price to come back to this neckline. That is this order block here. This candle that took out this liquidity before the drop. Yeah. So this is where I'm waiting for price to, push back up before we start selling, because obviously we're going to sell some more. We have more engineered liquidity around here. We have imbalances, FVGs around here. So there's more reason for price to drop. Yeah. So we were expecting that sell, but what we're doing now is more of a correctional trade. So dropping it down to the 4 hour, you could see here that, yes, we have some large imbalance, right? The market gave a very massive impulsive move. Do you think market is going to come all the way up to this point? I doubt it's going to happen, right? But what we have here, we have something. You see, the initial target from this my buy zone here, because initially I wanted to buy, I sent out a pending order here. Market did not activate us, did not come there, engineered some liquidity and moved out. Now you can see here that my entry from this point, and you can see where my take profit is. Why do I have my take profit at this point? I'm having my take profit at this point because of this order block, which is now a breaker block. Yeah. So order blocks are not just meant for entries, they are also meant for exits. So you know where to exit a trade when you are in a position, right, on the opposite side. So in this case now, you see my entries on that order block side, because I do know that when price gets to this order block, there's going to be a reaction. We may not see price eating up all into this imbalance here, but rather what, reacting from this order block and dropping. That is why sometimes you might see price react to a certain place and you'll be wondering, why did price just react from there? Look to the left. Always look to your left hand side of the screen or your right hand, wherever you're looking at the screen from, right? You will always see that there might be something, an order block that was not reacted initially, or the market did not, touch or mitigate and just blew past it, right? Now when price goes back there, obviously it's going to react as like, just as we have resistance turns support, support turns resistance. That is how the breaker block works. So that is why I'm using this breaker block as my what, exit point. And if you go back on your daily time frame, you will see that this same order block aligns with like what we call the head and shoulder pattern, right? So this is the head, this is the right shoulder, the left shoulder, and then we expect market to drop. Anyways, so breaking down this into smaller time frames, to pick out the exact entry. So let me break it down to the 1 hour now. So on the 1 hour, let me hide all of this so we can see it clearly. On the 1 hour, now momentum is high on the buy side. Why? Because yes, we're obviously going up to that zone that I showed you guys earlier on the higher time frame to go mitigate, right? But then again, you can see that on the lower time frame from the 1 hour, we are having a series of higher highs and higher lows. The structural highs are very clear, right? Which this is the last structural high that you can see, and there's a break of structure here, obviously. So if we're looking to get an actual entry, this is the point where we're waiting for price to come back to, right? We're waiting for price to come back to this order block, because this looks like a very, very, very valid order block. There is a sweep. This order block caused a break of structure, and what we just want to see a retracement back to this phase. Now, because of the momentum that price is currently on, I doubt that we're going to come back here now. We will react to this much later, but not now. This point, which is like a shallow retracement to me from the 1 hour time frame. But the reason why I'm taking this buy is because the market created something like an engineered liquidity, right? The setup on a much lower time frame, which tells me that, okay, now because the momentum is on my side, I'm on the trend on the lower time frame, I'm in line with the trend, and I have seen liquidity being generated in those areas. So that means this is the kind of situations where um I take shallow retracement into high consideration. That was why this setup was a valid one for me. So if you bring it down to the 15-minute time frame, this was where the setup came from. Yeah. So let me bring all of these drawings back. This was where the setup came from. Saw this low right here, this order block that the market created. The same things that we usually do on the higher time frame is the same thing I'm doing on the lower time frame. That is why I tell people, because when you see me trading most times on higher time frame, you feel like the strategy only works on higher time frame. No, the market is fractal, right? So the what they call it, the strategy can work on any time frame. You just need to understand your top-down analysis properly, right? So here, the same application. Now I have a sweep down here. If you look closely, this order block, right, swept liquidity, mitigated this small one. Then this same order block broke structure. It caused a nice break of structure. Then what do we have next? Market dropping down to this point, creating imbalance right here, right? There's a fair value gap, or however you want to call it, fair value gap, FVG right here. So there was no mitigation on this order block, and then it dropped again, engineering what we call a trend line liquidity, right? So after this trend line liquidity, it was very simple. I just saw the confirmation I needed. The trend was on my side. There's a break of structure. The order block has all its criteria to fill it up, and then what? I'd mark my zone, put my entry. Now I even did something here because I didn't want to miss out on this trade, because last week I missed out on a lot of setup because of fair value gap entries. That was why you saw I shifted my entry up to this point, just in case we want to use FVG before we move. All right, and still put my SL below here. Why? Because of the SL is not quite much. This is just like an 8 pip, or let's say 9 pip SL. Yeah, and then we're looking at a take profit point from the first part of let me see what was this again, how many pip. My first TP should be around 25 pip, right? That's the first TP, 25 pip. Now the reason I'm using this place as first TP is because market will definitely react to this order block here. So those of us that may be scared might easily run from here. You still got a good risk to roll, about the 1:3 or so. Then the overall take profit is 1:5. And you can see here that this is where I put the take profit points. And you might be wondering, so why on earth am I keeping my take profit point there? Remember this order block, this breaker block that we have here, right? On the smaller time frame. Remember that breaker block? That is the reason why I'm having my TP at that point, my overall TP. So I'm going to take out some profit here and then allow the rest close out to that point if I want to, right? So that's basically the breakdown of this very simple setup. This is why I like to start my trading on Tuesdays, because Mondays are usually crazy, right? Mondays can just get wild volatility and all of that. So Tuesdays are really nice to start trading. Anyways, if you are on this trade right now, what I want you to do is to break even if you haven't already, right? You can come down to the lower time frame. You can see that now we have broken structure here, right? So it's safe now to move your SL to your entry points, right? It's pretty safe now to do that. Break even so that you run risk free, or if you want, you can even take out profits at this point. We are good. That's just to say we are good on this one right now. Yeah. So I'm going to switch to the next pair that we are trading currently. This particular setup, GBP USD. This one I sent it out to just, I think, my VIP GBP USD. Please, I'm on GBP USD now. Let me know if you're on this chat right now. So GBP USD is still on drawdown. My trade is active, but we're on drawdown. And okay, so let's do the breakdown of this one. Pretty much the same thing, right? So like I said, I'm expecting a drop on GBP USD as well. Why? Because I'm correlating GBP USD and Euro USD. Like I said earlier, they're not 100% powerful correlation, but you can see that GBP USD is up to like 60 to 70% correlation. So definitely I do expect GBP USD to drop. However, stop loss is in place. That's the reason why we always have our stop loss orders in place. Now, this is the setup here. Very simple as well. Market has gotten to this high, created this high right here. Now, no, let's start from the higher time frame so you understand what I was looking at initially, right? So from the higher time frame, this is actually the zone I'm expecting price to come to, right? I have an order block in this zone. I think from 2 hour you can see the order block, or 1 hour. Okay, yeah, look at the order block right here. This one. I hope you guys can see my screen. I'm on GBP USD. So this is the order block here, and price, this is the destination I was expecting price to come to. Now, why did I change my mind and trying to sell from here? Because of this, right? Because of this. So when we got to this high right here, market did not get to that order block and gave a nice pull to the downside, which is more like a change of character, because this was the low that caused this high right here. That was where I got this choke from. And if you look at the 4 hour time frame, you would see that we had a sweep here. Market had a sweep here, all right? All of these are weeks, like a trend line movement. Then we had this bullish push to the upside, and then market finally formed a downward movement, which was like an evening star for us here. Now, after doing all of this on the 4-hour time frame, giving us the heads up that okay, we want to start the correction from this phase. Now we've swept this liquidity, we want to start the correction from this point, right? So what do I do next? I bring it down to lower time frame. Now on this lower time frame, this is where we are on the 1-hour time frame. You can see clearly the change of character here. You can see clearly that before this market started moving, this was the order block it created. So I have an order block that what created a change of character. And next thing, we have this engineered liquidity around this area here. Now, the only thing that gave me some shivers about this particular entry was this move here, where the market dropped, then went back into the structure. Now, this is a normal entry for me. This is my candlestick entry where I have a sweep, market drops, then goes back into the structure. Usually when there's this kind of move, the market always give, nice push in the opposite direction. However, because this was not significant, this was more of a liquidity pool for me, a liquidity area. I stuck to my strategy, stuck to my entry, which is at this point. Now, I'm not moved by this. I'm not phased by this. Even if I'm in a drawdown right now, it's not a problem. Do you know why? Because there is a stop loss order in place. Risk management. This thing can hover around here at the end of the day, still drop. This is just the London session, and we have not seen much movement already. We've seen some things, right? New York session can give us something entirely different. So I'm still holding on here. If you're still on this pair, just put your stop loss and hold. Anything can still happen, right? USD JPY has hit our first TP. If you're on this one, TP1 has been hit. So if you're still holding for TP2, make sure you break even or trail or take out some partials, right? You just have to take something or secure your trade. That's the most important thing. Then I still have one more setup to show us, guys, which is USD CHF. Yep, USD CHF. Okay. So I'm currently on USD CHF right now. So I remember I sent out, we did this analysis last week, yeah? USD CHF, we did this analysis last week. And this was everything. Let me show you guys this. So this was the setup we had. Now, last week, my entry was here. Let me show you guys this. My entry was here. This was where I put this entry. That was 0.8137. Now, market came close, right? It did not trigger us, about 6 pips or so to our entry. I still have that pending order on my MetaTrader. Let me see, about 7 pips to our entry. Now, when market came this close to our entry and moved away, I had a change of my entry here. So I didn't want to put it out there. I wanted to explain the reason why I'm changing my entry before, I correct this entry price. Now, it is very clear we have this same setup here, right? Market gave us a nice push to the upside. Before that push, did you notice this sweep, right? A nice sweep, candle sweep here, and the market dropping straight into the structure. Just as I got that other entry, this is the same procedure, right? Now, there is a very massive impulsive candle here, which obviously you cannot start trading from this sell point immediately this candle close. We have to wait for price to get back to this order block. That's one of the criteria for this kind of entry, right? Coming back to this order block, because there's a break of structure, there's a sweep, there's trend on our end. So what we want to do is very simple. We want to see price make its way back into the order block open, which could be our high time frame entry, or we can streamline this entry and even bring it even smaller, right? Now, all of this here, from this point, you can see that all this from this high to this low is our trading range. So whatever is happening inside here is just a correction. So obviously, now what we're going to be looking out for is where to join this next sell from. Obviously, Because price have given us this order block here, we already have an AOI, an area of interest. All we just want to see next is what? A confirmation of liquidity. Price should give liquidity around that area. Now, this was our initial entry, and see how price came really close to our entry and then what? Moved away, right? So the 4 hour entry is not bad. This is about 40 pips if you are if you can hold a higher time frame, right? But let's make this even smaller. Bring it down to a 1 hour time frame. So on a 1 hour time frame, we still have some imbalance or FVG inside this zone. So what is market reacting to now? We are reacting to this particular breaker block. Can you see that? This is a power breaker block. That's why I told you breaker block are usually very powerful and they always what? Mitigate. All right, they always mitigate. So right now price is reacting to this order block, and that's the same reason why USD JPY is buying. The same reason, because USD is on the base of USD CHF, USD is on the base of USD JPY. Are you seeing the correlation now? So this is plummeting and giving me more confidence on the buy that I'm holding on USD JPY. Now I didn't see this particular buy until it actually this sell until it actually started happening. That was why I just looked for the reason why the market reacted to it. However, it has created more liquidity here. What I'm now waiting for is, hey, I want price to now go deeper, right? Deeper into this right here for my USD CHF entry. So I have this order block here. I have this area of interest. Now my stop loss is even more reduced from 40 pips to about 30 pips, right? It's reduced by 10 pips. So I'm just expecting this market to drop down to maybe somewhere around this region, then start pulling back up for this sell. Now, the reason while this one is dropping to start pulling back up, that is where USD JPY is going to get to its TP and then start dropping as well. I don't know if that makes sense. Let me explain graphically, right? So I'm expecting price to drop down some more, then what? Come to this area and then start dropping. So if we switch to USD JPY, on USD JPY, which is this right here, I'm on USD JPY right now. I'm expecting that price should break above this and then start dropping as well. If that makes sense, right? Currency correlation, adding into analysis. So these are basically pairs that I'm waiting for, nothing more, nothing less. So if you have any pair you want me to look out for you, or you have any question you want to ask, this is the time we do that. We're already 45 minutes into, or let me say 30 minutes into our class. So we have a few more minutes before we end the class. So if you have any question on these explanations, or maybe you don't understand it quite well, or you want me to check out the setup for you, just let me know which setup you want us to look out for, and then we can check it out together. So we basically have 2 trades active this morning. I have some trades already that I'm holding that's from since last week. I'm still holding some of them. So just let me know in the comment if you have something. Yeah, I just spoke about GBP USD now. GBP USD is already active. My trade is active. Let me show you. Yeah, GBP USD is active, but I'm in a drawdown. Yeah, I'm in a drawdown right now on GBP USD. I'm still holding. My SL is already set. This is it. This is GBP USD. This is GBP USD. This was the sell we caught up on, but it's on the drawdown right now. However, I'm still holding this drawdown, and this is the outcome of the chart. This is where we are currently. Yeah, so I'm still holding GBP USD. I've done the explanation already on this. Sorry, gold. I have something on gold for us, guys. Gold. Yep, before we end this class, I have something on gold. So this is what I have on gold. Gold has been dropping pretty much. So now market is consolidating, right? We have this nice consolidation here after this massive drop from yesterday. So this is, I have a buy limit here, buy pending order here. And why do I have this order here? Let's start from the 4 hour time frame. Very simple analogy using breaker block here. This is where I'm expecting price to get to on euro on gold, but we've not gotten there. So we've made this impulsive move, this internal break of structure. Now we have a breaker block here. This order block was bashed. Market did not even react to it at all on the 4-hour time frame, right? On the 4-hour time. It is a very simple setup. Yeah, I'm still holding GBP for sale as well. So I'm trying to explain gold here. Yeah? So right now, you can see on the 4-hour time frame, the market did not respect this order block, blew past it. 4-hour order block is very strong, so obviously it's going to be something market should react to. Then if you come down to the 2-hour time frame, you're still going to find an order block there, right? That's still, the order block is still there. Now if you go to the 1-hour time frame as well, still having an order block there sitting on this same position. What does that tell you? That this place is going to be a very, like, a strong breaker block that markets should definitely react to, right? And then now we're having this accumulation. So what I'll be expecting is something like this. Though gold is crazy. When you have accumulation like this, then maybe a manipulation, yeah, before the distribution. So this could be the manipulation move here. Now, probably we're going to see action during the New York session here, where we see price dropping down, sweeping out this low right here as the manipulation to mitigate this breaker block. So something like this, mitigate this breaker block for a continuation to the upside, right? So basically something like this is what I'm expecting on gold. Yep. All right, guys. So this is as much as we can take on this call today. I hope you got value from this. I hope you learned something. Make sure you hit the like button. If you're not subscribed to our channel, please do subscribe. We're going to be having more of this as often as possible. And if you're on any of those trades, make sure you manage your trade properly. For the USD JPY, I'm sure that you must have taken out something or broken even. For the GBP USD setup, I'm still holding. Just put your stop loss there and hold. If you cannot hold, you can exit the trade, right? Entry on USD CHF, I've dropped that already. Okay, let me correct that entry on USD CHF. Let me correct that entry on USD CHF. So this is my new entry now. Is 81 0.8151 for the sell. So this is the stop loss price, and this is the entry price. All right. So should USD CHF start, pulling back up, that this is what we're going to expect. So it will be safe to exit USD JPY, right? Already we're beginning to form, market is reacting to this TP point here. So obviously we're going to see probably a little push before market starts dropping again. So this is a point where you can actually exit if you're not comfortable holding anymore, right? So thank you very much. I'm not sure there's any more question. So that is what we have for today. See you guys next time. Bye.